Good afternoon, everybody. Welcome to the next of our Essential series. These are topical and technical webinars focusing on women's wealth and wellness. Who's the Jura Society? Well, we bring women wealth holders and their advisors together through education, connection, and collaboration across our three pillars of women, wealth, and wellness. Our private network, the Society, provides invitation-only access and knowledge to leaders in the private client and wellness industries. This afternoon, I'm delighted to welcome Jen, Wealth Manager at Maseco, and Holly, Partner at Maseco, as we delve into the crucial aspects of tax and investment planning for US expats. Over the next 20 minutes or so, we'll be taking part in a Q&A style discussion. Please note this is for education purposes only. However, if you do have any questions, please do ask them in the chat or reach out to myself or the speakers after the conversation. So we're going to explore areas of conversation for new arrivals to the UK, but also those who have been here for a few years already. The session will flag areas in your portfolio that should be reviewed and might, for those of you who might be running out of time, whilst also covering off the basics. If you do want to learn anything else on this subject, again, as I said, please do reach out. So I'm just going to get the girls in now. 2 seconds. Hello, ladies.
Hiya.
Hello. So I'm going to kick off with you, Holly. Who are you? What do you do? And who are your typical clients?
So I'm Holly Calder and I work at Maseco, which is an accountancy firm based in London. I work on the expatriate tax team, so I'm dual US and UK tax qualified. So most of my clients are Americans living here in the UK, but I also help people with foreign assets that live in the US as well.
Thank you. Perfect. Right, now over to you, Jen. Who are you and what do you do?
Hi, I'm Jen. I'm one of the wealth managers here at Maseco Private Wealth. And very much like Holly, our kind of typical client is working with the US UK connected individuals. So whether that's people from the US that's coming to live in the UK, or whether that's kind of the other way around, people moving out to the US and helping them with all areas of their wealth management.
Brilliant. Concise. So let's kick off. Let's get into some of the more technical things that everybody is here and waiting to hear from you about. First things first, what do I need to do before I move to the UK for US purposes?
So I think one of the main things is just to at least start the conversation with an advisor, because there's a lot of things that people tend to think about, obviously schooling and where they want to live, but there's also that financial aspect where there's some things that if you can do beforehand, which we'll cover in a bit more detail, then it makes your life a lot simpler moving forwards. So the primary bit to look at is maybe your investments. So looking at your existing portfolio, because some of the funds, for example, that you might hold if you're a US individual in a brokerage account won't be tax efficient here in the UK. So you might encounter capital gains rates in the US and then income tax rates in the UK. So you want to make sure that you're working with someone who can help you restructure that to make sure that you don't have that double taxation, and instead it's capital gains in both the US and the UK.
And I think, Holly, can you expand a bit more on actually what that might look like from a tax perspective? What is double taxation?
So double taxation can arise if you're paying tax in two countries on the same income or gains and things aren't managed efficiently, or there isn't a treaty in place. Fortunately for US UK clients, there's a good double taxation treaty. So we'd be working with your tax advisor and investment manager to make sure, one, things are tax efficient, but also just make sure things are reported correctly. So one country gets, for example, the primary right to tax it and the other allows a credit, which would prevent double taxation. Also things to think about are timing of taxes. So it might be, and if once you're UK resident, it might be most of your income subject to UK tax first. So you might be paying that tax in the UK, so it lines up nicely with the US tax year. So the UK are doing a fiscal year, April to April. The US are doing calendar year, so it might be just keeping an eye on things, especially things like capital gains, making sure you pay the tax in the same year that you have that capital gain event to prevent double taxation and timing issues.
Brilliant, thank you. And I suppose in that same breath, it's useful to know that some products won't then work, will they? So ISAs, Jen, do you want to expand on that?
Yeah, so there's a number of things that work really well. If you're a UK national and UK resident, like an ISA, it's completely tax-free for UK people, but unfortunately the US don't recognise that tax wrapper, so they then decide to tax that, and that's when you can kind of have a mismatch again of your taxation. Another aspect is within the ISA itself, you can't necessarily access the funds that would then be tax efficient in the US as well, so that is a double layer really in there. And then a lot of kind of US people might have 529s set up for children if they have them, which is another area which, on the flip side, the UK and HMRC don't really understand how they like to tax it isn't the same as in the US.
Yeah, I think another key area can be kind of living trusts that are really common planning in the US, kind of set up as part of your estate planning, kind of estate planning work. Just a quick review of those before you come to the UK, as the UK has quite different rules about trusts, and both for income tax purposes and inheritance tax purposes. I think also just when you're starting to pick up different non-US assets as well, so you might set up a UK limited company, which is quite straightforward planning in the UK, that can, but one, be taxable in the US, and it leads to additional reporting. So it's good to have advisors kind of set up before you move, and to guide you through the first years so that everything can be done efficiently as possible, both for tax and just compliance purposes too.
Yeah, I think it's also an interesting point to note about married couples. They're seen very differently in the US as they are in the UK. Can you guys expand on that a little bit?
Yeah, so in the US, people can file married filing jointly to help spread out maybe income across a couple, whereas when you come to the UK, HMRC wants everyone to file separately. So that's one difference, that you have to know that you will still have to file here in the UK, but maybe you haven't previously. But it isn't necessarily HMRC trying to get more money out of you than the US would be, but it's just to be aware of.
Yeah, and it can be some quite good planning. So we'll talk about the UK rules in a bit, but if you have a different UK status couple, so maybe one person, an American married to a Brit, and they're both coming back to the UK, that can give some quite good planning opportunities as well.
Brilliant. Okay, so that's looking at before you move. What do you need to do now you're here before April this year? Because there are some big changes coming up that we're going to cover.
Yeah, so there's a lot of changes around the number of years that you've been resident here in the UK, and then when you're starting to be subject to UK taxes, and on what you're going to be subject to UK taxes. So with the changes coming in, it's important to talk to a tax advisor, a specialist US UK tax advisor to start with, to check how many years you've been resident here. Because the new rules, if you've been here resident more than 4 years, everything kind of your worldwide income will be subject to UK taxes after April. So there's going to be some things that you might need to look at, like we were talking about with the investments. If they're not tax efficient here in the UK currently, you have until April to potentially clean that up and make it tax efficient for you, so that you don't fall foul to that double taxation after April as well. So that's one of the key areas, just having an understanding of how many years you've been here, especially because it doesn't need to be 4 consecutive years. So it could be that you've been resident here and then come back, which can cause problems for some people if they think it's a consecutive that they need to be here for. There has also been a lot of changes with inheritance tax. So it used to be that if you've been resident here for 15 of the last 20 tax years, then you would then start to become subject to UK inheritance tax, but actually that's now changing to 10 years as well. So again, you might want to look at some of the structures that you have currently and what that's going to mean in a post-April landscape for you. So that's something to consider. On the UK only piece, if you've been working here, then you might be accumulating national insurance kind of credits that you've been paying national insurance, and this then goes towards your UK state pension. So there was recently a change in Congress in the US, which meant that you can actually still receive a full UK state pension, and it's not going to affect your social security. So prior to April, you might want to look at whether you have any gaps in your national insurance record, and then it tends to be around £800 a year maybe to top up your national insurance record per year. And that then allows you to have a full UK state pension and guaranteed income in later life.
That's really helpful. And do you know what? A question just popped up talking about retirement. I don't know if I ask this to you, if you're able to give any pointers, but just asking whether there's any guidance for a dual US-UK married couple who don't know where they ultimately want to retire. How can they keep their options open in a tax-efficient way?
Yeah, so a lot of our job and Holly's job as well is to try and make things flexible for people, because more and more people are becoming much more global and wanting to move around. So in the instance of the US and UK, there is that tax treaty in place, which Holly mentioned. So that pension wrapper will probably be recognised in the US very much, and there's something we can do and work around it to make sure that that's taxed correctly from a US and a UK perspective, and looking at the funds within it as well, to make sure it's efficient for you. Should you be in the US, the UK, if it's different jurisdictions, you might have to rope in another tax advisor to check that jurisdiction there.
Yeah. And I think the new 4-year fig rules kind of give you an opportunity, if you're retiring and moving to the UK, in those first 4 years, you can think about, for tax purposes, if you can get things out of those non-UK pensions tax-free in the UK. There might be some US tax, but UK rates are generally higher. So there's still quite a good 4-year window where you could do a bit of forward planning, just to cover you for those 4 years, but maybe a few years afterwards, while you make a solid plan about what you want to do.
That's really helpful. Thank you, girls. How about new arrivals who are coming to the UK after April 2025?
Yeah, so they'll be able to benefit from these new 4-year fig rules as soon as April's passed. It's important, though, to get this kind of clean 4-year tax-free period. To get the full 4 years, you'd have had to been out of the UK for 10 full tax years before that. And there'll be some people that kind of straddle that. So say you arrive this tax year, so you had a 10-year gap before this current year that you're in. You'd have 1 year in the current rules, then you'd have 3 years of those fig years left. So it becomes even more important to really just get check before you arrive. And if you've had those 10 full years, maybe delay coming into kind of post-April. We're kind of seeing inquiries where people are thinking of moving kind of in the next month, but if they delayed it another month, it might be that they get an extra year of that tax-free saving under the new rules. Shows the importance of planning, but also I think of education and knowing the unknowns, which actually ties in quite nicely with, can we just cover the topic of accidental Americans? Because we're talking about people here who have actually done some planning, they're coming over, they want everything nice and orderly. However, sometimes we get accidental Americans. Can you give a little overview of what that is? Yes, so we see quite a lot of accidental Americans. So, for example, if you were born in the US and it could even be to British parents, you're likely to have acquired a US citizenship, but you may not have lived there for 30 or 40 years, or maybe never as an adult, and you're just unaware of the US tax consequences. So, as an American citizen, wherever you live in the world, you need to file a US tax return. So we do quite a lot of work helping those people get back into the system. So they may not have ever filed, for example, if they left as a child, or they may have moved here kind of as a young adult and there's a big gap. So the IRS have actually got some generous filing methods that they let you kind of do a few catch-up years of filing, get back into the system with kind of low or no penalties. So yeah, just get in touch and kind of tidy things up. I think a lot of people are coming out of the woodwork, as Jen, you'd probably know, there's a lot more questions about, are you American, when you even open like a basic bank account.
Yeah, and I think as well, it's not just citizenship, but I've had some clients who've maybe gone to work in the US and they've picked up a green card whilst they were there, and they just thought that's now expired, threw it in the bin, and then came back to the UK, where actually you do actually have to formally give up your green card and things like that, and making sure that you're not still subject to US taxes. Or if maybe you have one spouse who has that US connection, the other doesn't, if you're still filing jointly in the US, then the spouse that doesn't have the US passport still falls into the tax of the US. So it's just making sure that you're aware of how you're currently being taxed and whether there's any steps to do to maybe get outside the US net as well.
Yeah, there's kind of a series of expatriation rules, especially in the US, if you're giving up your green card or your passport. And it's a potential exit tax. So again, just getting ahead, getting the advice before you do that, as there can be quite a lot of efficient planning that can be done to prevent that exit tax applying.
Brilliant. And then can we just touch on a little bit more about the inheritance tax differences in the UK and the US, because I think that falls under quite a lot of planning requirements. I don't know, Jen, do you want to sort of spell out what that looks like?
Yeah, so in the US, it's very lenient. So it's around 13 million that you have without being subject to state taxes in the US, and that is per person. So a couple might have around 26 million. Whereas in the UK, they're slightly different, and it's 325,000. So it's definitely planning that needs to be taken into account. And with the new changes, if you've been living here for 10 years, if you've been resident in the UK for 10 years, that's when you start to fall within that UK inheritance tax net. But there are some things where the UK is more lenient. So for example, lifetime gifting, you can gift away quite well everything if you wanted to in your estate, and as long as you kind of survive a certain period of time, then that's then outside of your estate from UK inheritance tax point of view. Whereas in the US, you have a gifting allowance, so it would start to eat away at that kind of the 13 million that you have. But there's definitely things that you can work around and do. Again, planning and working out actually how much you need for your life before you start giving away everything to future generations.
Yeah, and there's also, I mentioned the treaty before for income tax purposes, but there's also an estate tax treaty between the US and the UK, which can help if someone was facing a double tax situation. So that can be also really beneficial. I think that especially helps with the new rules about trusts. More of them are being caught by UK inheritance tax, and again, the treaty can be really useful there.
Brilliant. Thank you so much for that. So why don't we have a look at what the one thing, because there's a lot for us to digest there, but what's the one thing that you would suggest to people from a planning and tax and investments purposes who have been here for a number of years to do before April?
I think, well, kind of two things, but just check how many years you've actually been resident here. And if it is more than 4, but less than 15, have a look at the investments that you're holding and ask your current advisor what they would recommend you do if you have one, with the kind of changes coming in the UK, and if there's any red flags that they have in their portfolio.
Yeah, I think, following on from that as well, there's some kind of good transitional relief rules that are available after April. So kind of, look at maybe rebalancing now, but also it might allow you to bring some more funds over here more efficiently kind of after April. So I think it's split into before April and after April things.
You mentioned something called the F-bar. For anybody who's watching this doesn't know what that is, could you explain?
So an F-bar is a foreign bank account report. So that all Americans kind of fall into the scope of having to file that. And you need to file that if the aggregate balances in your non-US accounts exceed $10,000. So you'd have to, if you had an account with $12,000, an account with nothing in it, then both of those have to go on because the aggregate balance has gone on. And it also includes things like bank accounts, but also an investment accounts and non-US pensions and of any financial accounts. So that $10,000 is quite low. So a lot of people are caught by those rules, and they can penalise you quite badly for not filing them, even though there's no tax due with them. So just reach out to if you have any questions about that.
Thank you. And there are some other forms as well that US UK linked individuals need to complete. Do you want to share a bit about W8?
Jen, do you want to answer that one? I can do this. Yeah, it's kind of a tax and investment. So it's a form W8. There's a whole series of them with different letters after them. But the W8 is disclosing your US tax status. So, and it's normally when you have those US assets in the account. So if you had like a just a UK only person had some US shares, they might need to fill it in to disclose that they're not American. Also, Americans often have to fill them in to disclose they are American. And normally, why do they need to fill the form in? One, so that kind of information sharing can happen with the IRS, and two, so that if there's any tax that needs to be withheld at source and a treaty needs to be applied, then the right tax rates is obtained.
Perfect. Can we just touch on mortgages, because I know that they can be quite a complex, murky space for US individuals. Sorry, off script there.
Important. No. A lot of people obviously want to buy a property if they're staying here in the UK for a long period of time, and the way that unfortunately foreign exchange works is they could take out a mortgage, and if the foreign exchange works against them, there could be a phantom gain in the US, on your UK mortgage. So depending on the way that FX rate moves, and then you might have a gain that you've not necessarily actually been able to benefit from at all from the US perspective. And then sometimes, I know Holly will be able to clear this up, but you might have foreign tax credits that you can use, but it depends on how long you've been here and kind of the UK taxes that you paid, whether you have those.
Yeah. So there might be, it normally gets categorized in the same category as your employment income, which as a UK person, the rates here are a lot higher. So you could be paying 40% tax when you're only over 50,000, and the top rate in the US is 37. So you get excess tax credits you don't need, so you can use them against this phantom gain. I guess just like an easy example of it, if you borrowed £100,000 and the exchange rate was 1.5, then you'd have $150,000 of debt. If you paid that £100,000 off when the exchange rate was 1.2, then you'd be paying off $150,000 of debt with $120,000 of money. So then there's this phantom $30,000 gain. So that's where the numbers come from, and it can, depending on where the exchange rate goes, it can swing quite dramatically.
How do they know that that's happened?
Well, there's a block for it on the return, so I guess, or it's just, you'd have to tell your advisor. Your advisor should be asking if you moved house, for example. And I guess with the kind of more, the IRS has access to much more information now for Americans living overseas, so they could see. I don't know exactly what they'd see, but
they'll know. They will know. They will find you, and they will get your phantom gain. Let's just
think that we've been asked more because the interest rates have gone up considerably. A lot of people are looking to kind of pay down more debt, and it's just flagging that to people to say, look, maybe if you have foreign tax credits, or this could be implication. So it's just to be aware of before you try and pay down debt pre-interest rates.
Brilliant, thank you. Can we just talk about the practicalities of foreign tax credits there as well, in terms of how long do they last? How do you apply them? Is it just something we pass over to you, Holly, and you just deal with it?
Yeah, so foreign tax credits, so most people do them on the paid basis, so that's when you pay them. Very few people as the accrued basis, but I won't go into too much detail onto that. But so say for a simple example, if you had your salary paid for you and they withhold UK tax on that, then you can take a credit for that UK tax paid on your US tax return, and it's given against the US tax due on that same income. So you can carry them, use them in that year on your US return. Any excess that you don't use can be carried forward 10 years, or you can carry it back 1 year, which can sometimes help in a kind of not a double tax situation, but a timings issue. If you'd had an income or gains event in 1 year and you hadn't paid the tax in the same year, so that can just help kind of tidy things up, really.
Cool, thank you. So what happens if I've been in the UK and I haven't filed my returns? How will they know?
So I guess in the US, this kind of comes back to the accidental Americans point. So I'm not 100% how they will know, if I'm honest, but you should go back and look at, okay, maybe the last 5 years for reporting and the last 3 years for kind of streamlining, as it's called, to make sure that you're able to clean everything up. And like Holly said earlier, get back into the system so that going forwards, it's not willfully not filing your taxes in the UK.
Yeah, because don't they have that thing where it's like it's on you to file them? I can't remember what that phrase is. You can't just pretend you didn't know, even if you didn't know.
There's quite a generous definition. So as long as you're non-willful, you can use these special procedures to get back into the system. And the IRS do actually allow quite a generous definition of that. So it's good to reach out to an advisor. And I think even if you open like a normal bank account now, they ask you if you're American, if you were just a normal person in the UK, which I think is part of the FATCA rules, which then report that information to the IRS if you were American. So that was, I think, that people, once they start getting on top of that information, then it's better to come forward before they come after you.
Yeah, always be in the lead. Don't want to be chased. So let's just simplify this a little bit. What is the most tax advantageous way to save or invest for US nationals living in the UK?
So from our perspective, we look at kind of tax advantage wrappers that actually make sense from both the US and the UK. So we touched on, for example, ISAs not working for Americans, but kind of US retirement plans, they're kind of very tax efficient from both the US and a UK perspective, and UK pensions can be as well. What we tend to do is we custody assets out in the US, so you don't have kind of the reporting that Holly mentioned with the FBAR reporting and things like that, but then making sure that if it is a brokerage account in the US, that the actual funds or stock that you're holding is tax efficient in the UK, because that's when you start falling foul on the UK side.
Thank you. Any points from you, Holly, on that?
No, I think just following up from what Jen said, really, and also it's just good to have if we work a lot with Maseco, that they're like they can do the US and the UK wealth management, where you can do the US and UK tax, and when you have a team of people that can do both, it really helps. You're not kind of in the middle dealing with the wealth manager in the US and then tax advisors in different places. I think it's really important.
Yeah, joined up approach, I think, is what makes it seamless and stressless, ideally for clients, especially if you, say, have a US spouse with a UK national, and then you're having that whole juggle. They just need you guys to sort them out, really.
Yeah, definitely. It's just much easier having the whole picture of the family in question, but then also whole bit to the rest of the team and their insights, because there is stuff that I just don't know that Holly does, and vice versa. So we need a tax advisor in the room as well to help a lot of things.
Yeah, definitely. And I think as well, things like school fees, would there be any, sorry, this just fell into my head, would there be any techniques to actually pay them efficiently, or is that irrelevant?
So less with school fees, but university fees. This is where some people use a 529, which a lot of times, if it's a 529 with a UK resident owner, then that makes it not very tax efficient from a UK point of view, because of the way that they view it as kind of more of a trust rather than this 529 plan. So it's trying to work out whether there's any planning that can be done around that. Again, before you move, maybe grandparents in the US could open a 529 for your children instead, and then that could then be used for them for their college and university fees.
That's good to know. Anybody who's watching this and is a bit scared about the VAT increases to UK school fees or university fees, that could be an option for planning if you do have American grandparents. Brilliant. Thank you so much, ladies. Just to wrap up, what is your one thing that you would recommend anybody do who is maybe stuck in this little trap?
I think just speak to someone ahead of moving. I think 18 months ahead, it makes it very difficult to plan for tax. If you're saying I'm coming next week or even next month, and definitely a tax year ahead helps.
Yeah, and then if you are here already, again, just reaching out, because leaving it and putting your head in the sand doesn't necessarily help in the long term. If you can just get it done and cleaned up, then you just know that stress is then hopefully off your shoulders going forwards.
Brilliant. Wow. Thank you. And thank you to everybody Sorry, not my cold. Thank you to everybody for tuning in. We've done a real good whistle-stop tour on the US UK landscape there. So thank you for sharing all of your wisdom and knowledge. Thank you to everybody who submitted questions. If you do have anything else that you'd like to follow up with, or if you're watching this on replay, feel free to reach out to myself, Jen, or Holly directly. And yeah, look forward to seeing you all very soon. Thank you.
Thank you for having us.
See you soon. Bye-bye.